hello. I have the heads of foreign exchange joining me here today. That's Jeremy and Matthew. Thank you for joining us. So let's get started with your opinion on the markets. Matthew, would you like to start us off?
Yeah, sure. So the US dollar has been on a large bull run over the last 12 to 14 weeks, and it's about 7% increase in the US dollar index. And this is largely because of the economic divergence between US and other regions. So, for example, the Eurozone is projected to have a triple-dip recession, deflation, and Japan continuing to buy sovereign bonds. So this is going to have a really depressive impact on the Japanese currency. So, yeah.
So Matthew, what's your outlook on the US dollar Japanese yen for the rest of the year?
So I'm currently long the US dollar to the Japanese yen, but in a really, really short time frame. So next week there's a FOMC meeting. So Janet Yellen is going to talk about quite a number of things, which the most important thing will be the rates hike, possible rates hike in next year or maybe in the future. So with respect to that, I feel that the currency will be within Japanese currency will be within 110 to 105. So within that range, I'm long in anticipation of taking profits before 110. So the reason being, I'm still long the US dollar until Janet Yellen says something else otherwise. And I personally feel that whatever she says in this meeting will dictate the pace of the US dollar to the yen for the rest of the year. So there's a lot of confidence in the US dollar, and this can be seen in how economic data over the past week has caused US dollar to rise. So for example, the CPI and the jobless claims data has fallen short of expectations, and that usually causes the US dollar to drop. But instead, US dollar has been rising on the back of such data, showing really, really strong bull confidence in the US dollar.
Well, I agree entirely with Matthew here. I think that Janet Yellen and the FOMC next week is going to be pivotal for the rest of the year. However, I think that even though they will end the QE program, they'll finish the tapering, I do think that they'll err on the dovish side. Inflation expectations in the US have been dropping quite sharply on the back of falling oil prices. And I think Yellen might use this as an excuse to push back rate hikes until Q3 or Q4 of 2015. Now, given the current positioning in the dollar, we've had, as you said, 12 strong weeks. Everyone is long the dollar. This slight dovishness might cause people to take profits on their trades, and we might see a deeper pullback in the dollar over the next sort of 3 months going into year end, I suppose. On the other hand, when we look at the euro dollar, we have to consider the ECB. Their QE program is likely to occur at the beginning of next year, and there's going to be a lot of noise, various headlines coming across to do with the ECB, how it's going to be constructed, how large is it going to be, and as such, the euro is going to be very volatile for the rest of the year, and I think there's going to be lots of opportunities in that. So Matthew, what do you really think about the euro?
I think I completely agree with you, except that I feel that I'm short the euro USD now, just because I don't think the QE has been priced in yet. So what has been priced in will be Germany's weaknesses, the Eurozone's weakness in the economy. That's all that's been priced in so far. Maybe a little bit of QE. Personally, I feel that volatility is bound to come in the next coming few weeks. And what this provides us is a good opportunity to find a higher price to short the Euro USD. As of now, I'm in no position for the Euro USD, but this coming few weeks will be a really good opportunity.
So what are your opinions on the emerging markets? There has been a large-scale depreciation in the currencies, and I'm sure the viewers would like to know your opinion on how to exploit such weaknesses.
Well, starting off, 2014 has been quite a bad year for emerging market currencies. The ruble has been incredibly weak so far this year, and nearly every currency is down against the dollar. However, when we consider it on a basket basis, i.e. not pricing against the dollar, but maybe the euro, maybe the yen, maybe the Swiss franc, emerging markets haven't performed that badly, especially on a carry-adjusted basis. So I think that will continue to perform well. However, looking more specifically at Russia, the ruble has, as I said, performed really badly this year. Recently, the weakness in oil prices hasn't been helping Russia. And I think that with the central bank intervening every day to protect the Russian ruble, the slide will stop. Currently, just as of yesterday, we traded an all-time low, somewhere around 42 against the US dollar. And it's really quite weak, but it will slow down. The central bank has got a lot of firepower and they can keep at it for years. So I don't think there's an issue there. However, personally speaking, looking forward, a trade idea that I would be looking into is based on this idea that the central bank's still involved, getting long Russian-denominated assets, whether they be equity or fixed income, and specifically short-duration government bonds denominated in rubles. Matt?
Personally, I feel that the long carry trade is a really, really good trade in the future, for the future. So my favorite currency for that will be the Indian rupee. It's currently it has a 10% interest rate right now, so that's a really, really good yield for a currency trade. And not only that, what's more important is that the new Prime Minister in India, he wants to undergo structural reforms. And in India, for the past 10, 20 years, it's been the most problematic issue they have. So with structural reforms, investors are going to pour money into India. And with the 10% interest rate, we are actually looking at a really profitable trade here.
We really enjoyed your insight on the markets. Thank you so much for your time. Thank you.